The Nasdaq 100 once again gapped down overnight on Sunday, with protests in China over the weekend over zero COVID policy causing concerns over supply chains and the growth in the second largest economy. Apple was one of the stocks to get hit on reports the unrest at a factory in China could mean up to 6 million fewer iPhone units for the year. Since the end of September, there have been 8 gap downs, and so far all have filled, including the most recent one from the week. The China zero COVID policy and lockdown headlines have typically driven a few of these gap downs, only for the rumors of reopening to come out and price filling these gaps when markets opened on Monday. Tuesday saw price head lower and retest the 11,480 support level, which held, and on Wednesday we had Powell speaking, and he confirmed that the central bank will slow the pace of its aggressive rate hike campaign. He said the time for moderating the pace of rate increases may come as soon as the December meeting, which was music to the market's ears, and price saw a sharp rally off the 11,480 support level. Price broke through the 11,688 resistance level in the process, and on Thursday almost touched the 200-day moving average, as highlighted here. Thursday also saw the Fed's preferred inflation measure, PCE, rise by 0.2% in October, slightly below the estimates of 0.3%. Friday then was all about the jobs report. Plus 263k jobs for November, above the 200k estimate, whilst average hourly earnings came in way above at 0.6% when only 0.3% was expected, suggesting that inflation is entrenched in wages now, which is bad news for the Fed. Bond yields immediately jumped following the jobs report, whilst equities fell, and you can see that inverse relationship here between the Nasdaq 100 and the 10-year. The same thing happened when Powell spoke about slowing rate hikes on Wednesday. Yields tumbled while stocks rallied. Now if we have a look at the weekly chart, we can see price remains below this key trendline resistance around 11,880 to 900. This really is the key. If price closes below this area despite the intra-week break we had that was triggered by Powell, the bears remain in control and the move up is a bull trap. In terms of levels to watch into the close of next week, 11,880 to 900 is the key. Close below and the selling accelerates. If price closes above, the 200-day moving average around 12,133 is the focus, followed by 12,180. Downside levels to watch are 11,688 followed by 11,480. If price closes the week below the key trend line, expect further downside into next week. With that said, thanks for watching. Remember to hit that subscribe button so you don't miss out on future content. And I'll see you at the next one.